Okay, controlling, um, general controlling, organization, maintain number ranges for CO documents. Very important. LAP1, CO area. Okay, L9, L9P1. No, that was our controlling area. LAP1. Lab group, LAP. Okay, LAP. Intervals. Okay, 09. Number status is 0. Change groups. And RQU1. RQU coin, RQU1. Coin. Double click. Coin RQU1. Okay, it's already assigned. We go to the next step. Okay, next step is XPRO. Financial accounting. Global setting. Ledgers. Integration of controlling with financial accounting. Define document type variants. Variants for business transactions. Zero one. Mapping of CO business transactions. Document types. Okay, now these are transactions. For example, KSII, actual price calculation of overheads of product cost that will be dealt with document type CO. And if there are cross-company codes, of course, CO document type will be dealing with that. Okay. Okay. New entries. No, we'll have to go away. Same path. Controlling, check and define default values. Document types for posting and controlling. Okay, these are document types. Okay, company code. We'll see if LAP is already assigned. LAP LAP1, LAP2, but LAP is not assigned. Okay, LAP1. LAP1 is already assigned. Oh, okay. LAP1 is already assigned. Fine, 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 fine. Define ledger for LAP1. LAP1 is already assigned. Okay. Ledger for CO version. LAP. LAP is already assigned with ledger 0L, which is the base ledger for the entire SAP landscape. Okay, legal valuation is there. And we will need another one, which I believe. Okay. New entries, LAP. Let's see if this version is available with us or not, because last time we made this in the ledger section. Okay, profit center and group valuation. Group valuation, yes, we want this 0L and not yet active. Okay, group valuation, save. Okay, LP1. Okay, now coming back to our currency settings. Okay, currency settings, we've already discussed that. Now let's actually go for the next step, that is OKKS. OKKS is controlling area is LAP. Okay, that is set. Next step is SPRO. Controlling basic settings, basic settings. Ten versions. Maintain controlling area. OKKP. Okay. LAP. LAP double click. Okay. Standard hierarchy is our cost center hierarchy. Is also maintained. Activate components. Components cost centers are active. Okay. Assignment of company codes. Company codes is LAP 1. Okay. Okay. Next step is profit center accounting. Basic settings. Controlling area settings. Maintain controlling area settings. Okay, standard hierarchy will be STD standard hierarchy. Okay. Elimination of internal business volume. Why is this done basically? Let me just finish this off. Over here, we will have option for company code currency, profit center currency, controlling area currency, and group currency. Company code is not given here, usually it is given, but we can have the option for profit center, controlling area, and group. Whatever the business process allows us, we'll actually go with controlling area currency, confirm. Now in elimination of internal business volume, now company to company transactions have to be eliminated for internal profits have to be eliminated for consolidation. Okay. So controlling area currency, okay, has already been used. LAP. Okay, USD will be taken. Okay, company code currency is AED. Okay, save. Save. Now we'll create a dummy profit center. Master data, profit center, create dummy profit centers. Now, why do we create dummy profit centers? This is an important question that can be asked in an interview. Now, dummy can be a dummy, but it's not dummy. Basically, cost centers that actually post consumption or are being used transfer primary cost from FI to CO will have automatic assignment with dummy profit center. Okay, LAP underscore dummy. Basic data we'll see when we actually cross the transactions ahead, and then we'll do it. Okay. Dummy profit center for LAP. Profit center group. Standard hierarchy lab. Okay. And we save it. Now segment, if you see, segment is superlative to a profit center. So a profit center reports to a segment. So what is a segment? Segment can be a business vertical. Okay. It is giving a warning, but warning is in orange. So we can just press enter and we can move forward. Now, dummy profit center is done. Okay. Now, let's go and create the next step, that is 1KEF. Now, 1KEF is the settings for for actual postings. These are control parameters for actual posting. Now, what do we mean by actual posting 2023? Line items will be posted. Online transfer means line items that will be generating like FI to CO postings, CO to production overheads or production order transfer. Everything will be real time, and line items that are generated, not consolidated, not totals, but line items will be, transaction items will be generated. Okay. Now, uh, general controlling, accounting, controlling areas, settings, maintain, plan versions. This was the last transaction that we did. Plan version, maintain plan versions. Okay, now this is very important over here. Actual plan version. Now, what is actual plan version? Now, our plan will be for a month to calculate the cost of the product. Production cost will be planned, forecasted, and it will be based on standard prices. Now, what are standard prices? Which are set prices, like fixed price that we see in retail shops. But standard can differ from actual. Actual can be higher or lower. So plan costing is done throughout the month. It can change, but an actual is done at end of the month. At the end of the month, we'll of course have production orders which are not closed and which are still in process, and we'll have to calculate work in process. So difference of plan and actual will also create variance. Now, what do we do with the variance? Now, variance is of 6 to 7 types. Now, those variances have to be transferred to product profitability analysis. That is a reporting tool. Now, variance is transferred to profitability analysis that we'll discuss ahead. But right now, we have versions for reporting and for passing line items. We can have our own versions as well. Okay, right now it's 0, and I will say settings for profit center. Okay. New entries, 2023 online transfer line items, exchange rate type will be M, because we are maintaining multiple currencies for controlling area for company code at group level as well. Okay, so let's save it. So M is, what is M? Let me just tell you that. Okay, now what is M basically? Now M is basically, out of many exchange rate types, there are many segments, many categories. Calculate difference between foreign currencies and local currencies, whatever the currency is being used. So right now we're using standard translation at average rate, which is a daily rate. Okay, based on that, or standard translation for cost planning. We actually use both of these. We'll be using P as well. So there are different ways to calculate the difference and convert the currencies. Okay. So M we have taken. Now let's move ahead, and we will now create profit centers. Okay. Profit centers, master data, profit center, define profit center, create profit center. The transaction will be KE51. This is your front end activity. So slowly we are moving ahead to front end activity, but our configuration is still not over. Okay. Now, LAP is our controlling area, master data. Okay, 0123 to 311299. Okay. And let's say, let's give it a name, plant 1 and 2. Okay. Plant LAP 1 and LAP 2. Okay. Gym department profit center group will be okay. Lab segment, of course, we'll choose our segment over here. Okay, now segment that we actually made. LAPP, LASU, we already made this. L9, L1 PP, L1 SU. Okay, L1. L1 passenger. Okay. L1 PV. Activate. Okay. Profit center. E102. Master data. Plant LAP3. Center group. Segment L1 SU. L1 SU. Okay. Now, this is done. Now, we will actually now create cost centers. Now, what basically are cost centers? Cost centers actually capture your primary and secondary costs. By primary, I mean that is being transferred from FI Finance, while secondary costs are that are generated within CO. Okay, now let me just put it in an example over here. let's say you have a profit center. Now, profit center can be a plant as well. Okay. And now our plants, let's say it's a 1000 is the name. Okay. The cost centers that we will have is 1001, which is body shop, 1002 assembling, 1003 paint shop. Okay. Okay. Then we have, and this plant can be, let's say, in Sharjah. Okay. Then we have another plant, 2000. Okay. And this is Detroit plant. Okay. 2001, it will have the same body shop. 2002 assembly. 2003 paint shop. Just a second. Okay, paint shop. And then this is in Detroit. Okay. Then we will have independent cost centers like for sales, 1001 admin. This is the setup that we are going to follow. Now, for example, let's spread it out. Profit center 1000, which is Sharjah. Profit center 2000. Okay, that is in Detroit. We have cost, and or you can say it a revenue element. Now, what is a cost and revenue element? It's nothing but a GL from the just so okay. And what is a cost element and what is the definition of cost element? In FI, we have GLs, okay? In CO, it's the same mirror copy of GL where it's called cost or revenue element. Why do we call it revenue element when it's capturing cost only? Because within profit center to profit center, there can be revenue sharing as well. Okay. Okay, that was just the definition. I hope that is clear. So let's say we have 1001, 1002, 1003. And over here we have 2001, 2002, and 2003. Okay. And based on our cost element, let's say cost element is 400, 500, which is the GL or the cost element for salaries. Okay, for the salaries. For profit center, 27,000. For 1002, it's 18,000, 9,000 for this one. Okay, now 9,000 is recorded for this one. 27,000 is recorded for this one, and 18,000 is recorded for this one under this GL, this cost element. Okay, fair enough. Now, okay, next is we have another cost element 400, 600, which is for rent. Okay, for the same cost center, it will be 45K, 54K, and 27K. Okay, and 27K for this, 9K, and 9K for this. Okay, so the total of this grand total of this is 108,000. And the grand total of this is 177,000. Not grand total, but total. Okay. And so the grand total cost center wise, if you look at it, okay, this is somewhere around 72K, 72K, and 36K, 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 and 27,000. Okay. And that being said, if we add profit center wise, if you look at it, it's under the total of these three is somewhere around 207,000, and of this is 105,000. So the grand total of this and this will be the same, 279,000. Okay. Now, based on this, let's say our sales cost element CE is for sales is 300, 510. This is for sales, and the sales recorded, and the sales that is recorded under this profit center, which can be a geographical profit center. Okay, sorry, this is it. 7. Okay. 13500. This is the sales total is 279, and this is 342,000 and 242. So profit center wise profitability is easy over here to calculate. Okay, profit center wise, of course, we are good with somewhere around 27,000. Okay, and 36,000. Okay, and the grand total of profitability is 63,000. So this is how we actually segregate between cost center costing and profit center wise segmentation of our cost centers and cost elements. Okay. Now, thing is, if we go into much more discussion and argument for difference between ECC and S/4HANA, that will require another set of lecture. So we'll just move forward and we'll actually create our field status group. Okay, that's the next step. The thing is, this explanation was very much important. Now let's go back and check our field status group, which actually is falling under global settings, ledgers, fields, define field status groups, field status variants. Okay, we have LAP, L1, FSV. No, it's not the one. LAP9, L9FS, L1FS. We already have that. Field status groups. I'll just wrap it up. Okay. Okay, G04 cost accounts. Copy as. G02. And over here, required cost centers. And already exist. Oh, 02. G02. Okay, it's already there. CC is required. Double click. Count assignment. And over here, we have the cost center as required. Whenever we actually attach this to a GL, whenever we make an entry in that GL, it will be posted to a cost center and it will be mandatory to post it. So that was today's lecture. I'm stopping over here and I'll share the recording after this.
Thank you.